Hey everybody, Courtney Smith here. I want to give you an update on my outlook on the market after today's hard down day, 3% plus down day. And I'm going to look at it only from a technical perspective, not from a fundamental perspective today. So this is this little chart on the upper left is the weekly chart, and this one over here is the daily chart. So let's expand this out, make it a little bit bigger so you can see it easier. And here's obviously the COVID crash. We get a big, powerful bull market that takes us up here to August. The market then dips. That's okay. Markets are allowed to dip. But if it's a bull market, it should rally right back up again and make a new high. As of now, we've now gone 2 months without making a new high. Now that's certainly acceptable, but that means it's not a good bull market. We had a dip over here of a week or two. I had a little consolidation here for about a month, but this is weak. Now the thing is that what we have to look at is this pattern. And I'm going to use classical charting, but trust me, I do it better than anybody. All right, and I'll show you why in a second. So we come down here, we drop, we rally up, we get very close to the old highs. If this was a bull market, we're supposed to go make new bull market highs. We didn't. So when you get close to the old highs and start to come down, your trading spidey sense has to be alert to the possibility that this is what's called a failure top. So let me give you some education here. So what is a failure top? Well, failure top is a bull market which goes up and sniffs out the old highs but starts to fail. That's the beginning part of a failure top. The failure top is completed and confirmed when it breaks this low that's in between the high and the almost high. So a break below this point here would mean definitely it is a failure top. Now there's one other qualification that has to be in place for this to be a failure top, and that's we look at the volume. And volume as it goes through any chart pattern has to go down. If it goes up, if it goes sideways, then it's not a legitimate formation. But as you can see here, it's been going down. It doesn't have to go in a straight line, but generally speaking, it's been going down. And so that confirms to me that this is likely a failure top. So we now have to trade it as a potential failure top. We can't reject it and just say, no, it's just a little retracement. No, we have to be very serious that it is a failure top. Okay, so now it's confirmed if it breaks this low. The next part of a failure top is very important because it also gives us an objective of where the market is going to go after it breaks this low. And it's really very simple. You take the top of the formation to the bottom of the formation. Now let me just ballpark that. So the top is, let's call it 35.80, and the low is 31.95. Okay. So I'm going to get I'm going over to my calculator over here. So if I take, well, you know what? Let's just use the exact number, 35.76. If I'm not going to do it in my head, I might as well do it exactly. And then we take the low of the formation, which is 31.98. So that's 378 S&P points. And then what we do is we subtract that difference, that 378, from the low here. So I'm going to change that. So the low here on this day was 31.98. And then we're going to subtract 378, and that gets us 28.20. So that's right about down here. That gives us our objective. 38.20 is down here. Okay? That's our objective if it breaks here. Now I need you to stop and think for a second. 28.20 from 30, almost 3,600, that's a correction. actually, it might even be a bear market. A bear market is a 20% correction. A correction is 10%. So 10% is a correction, 20% is a bear market. I'll do the math later. You can do the math right now if you want. But 400, basically, it's 400, 800. I'm just going to ballpark it, okay? Ballpark it. So the top over here is 35.76. That's 22% from the high. So that would be a bear market. So we now can start to look at some of the microscopic things to tell us, is this truly going to be a failure top? So we can start to look at some other things, which I always like conclusive evidence, but it's not conclusive. I have to be honest with you. But let's take a look at some of these. Number one, we opened on the high, we closed near the low. It's a wide-ranging day, open on the high, close near the low. That means lots of downside momentum, which means really, if you believe that it's going to be a failure top, you've got to be buying protection now. Buy puts on the S&P, short sell stocks, buy inverse ETFs, do all of those types of things. The next thing I noticed on this chart was this red indicator here is now -3. This is my famous Conqueror indicator, totally unique, only taught by me, only invented by me. It's now giving a sell signal, all right? So that's bearish. If we look at things like the RSI 14, it's basically at the lowest level it's been all year, all right? If we come down here, stochastics have been a little bit lower, but whenever they got this low, we usually got a rally. So that's a little bit bullish. But here's the other one that I wanted to point out. We got an increase in volume today. So this is the highest volume since we had some bear market days back here and here. And also the ADX is going up, which confirms the ADX is saying it's in a bear market already. So when we go through the various indicators, we see that all but one of them are also confirming that this could be already a bear market, and the final coup de grace would be the break of and the creation of the failure top. So this is a pretty bearish technical position that we're in right now, and I want to alert you to all of those things, and you should be looking at you should be considering very seriously bear market trades to offset your current long positions or to create money on the downside. All right, everybody, go be careful. Talk to you later.